Infosys CFO Nilanjan Roy has decided to part ways with the company, making it the 11th exit in the last 15 months. Stock trades under pressure.
And the street shows lots of love for the IREDA stock, and the government considers Navratna status for the company. IREDA's shares have gained 59% in just the past 5 trading sessions.
Large trade in Mankind Pharma, 1.5 crore shares or 3.6% equity change hands. Stock trades lower by over 2%. Hello and welcome. You're watching Market IQ on NDTV Profit. I am Pallavi Nahata and with me is Alex Matthew.
Hi Pallavi, and good afternoon to all of our viewers. Let's take a check of how the markets are faring. Just over the last half an hour or so, you've seen a bit of a downtick for the benchmark indices. The Nifty 50 trading at very close to the low point of the day. And I must point out that it has been a very narrow band for the Nifty 50 in trade today. In fact, just about 65 or 70 points or thereabouts. It is in fact trading down about 0.2% or so. The broader markets have also given up a bit of ground, and in fact you have the mid-cap 150 index that's trading now with cuts of about 0.2% as well, but the small cap index continues to trade in the green. You have the small cap 250 that is staying in the green and up about 0.1% or thereabouts. Let's take a look at some of the sectors then. You have metal as well as media that are trading with gains right now. In fact, the metal index is up as much as 0.7% or thereabouts. IT is up about 1/3%. Among the key losers, you have realty, which is leading the declines on the sectoral front. It is down about 0.9% or thereabouts. Energy and oil and gas are also losing ground. In terms of individual stocks, and take a look at some of the key contributors on the Nifty 50 as well, and I'm pulling some of those stocks up as we speak. You have HDFC Life right on top of the screen that is doing quite well. In fact, quite a few of the life insurance companies as well as the general insurance companies doing well in trade today. You have Ultratech Cement that is gaining about 2.4% as well. You have Hindalco, which is up about 2.3%, and Bajaj Auto and Hero MotoCorp both gaining over 1.5% each. Among the losers, you have BPCL that has continued to lose ground. In fact, it has lost ground for a few sessions in a row. It is down about 3.7% or thereabouts in trade today. Apollo Hospitals, Sun Pharma, Eicher Motors, as well as Titan, all losing over 1%. L&T, Coal India, NTPC, Britannia, all over 1% losses in trade. In fact, if anything, the market breadth has turned just a tad bit. If we can pull up the market breadth, that will perhaps give you a sense of where we stand right now in terms of the advance and decline ratio. I believe that has seen a bit of a change. So there you go. In the last half an hour or so, you've seen more declines rather than advances, and that tone has shifted midway through. But apart from markets, you're going to have a big focus today on macro economy, and we're watching for the CPI inflation data, not just here in India, but in the US as well. In India, we're likely, Pallavi, to see an uptick in the CPI inflation for the month of November.
That's absolutely correct. So India's retail inflation is set to rise. In November, a panel of economists polled by Bloomberg forecasts inflation at 5.78% for November. That's compared to 4.87% we saw in the previous month. And this rise is likely to be led largely by prices of onions, tomatoes and pulses. So core CPI inflation that actually excludes the impact of food and fuel is expected to remain steady in November. Now, retail prices of onions have seen a very sharp rise, 60% month on month in November. In December too, prices have edged down slightly, but the pressure on CPI is likely to persist, particularly as the Rabi harvest is still some time away from coming into the markets. Now, also pulses, like we spoke, in case of tur dal, price pressures have been persistent for some time and are likely to persist even going forward.
Absolutely.
So listen in to a very short snippet by Shaktikanta Das on what he has to say on what's the expectation from today's figures.
Since the last policy, CPI headline inflation moderated to 4.9% in October from 7.4% in July. The moderation was observed in all components of CPI, namely food, fuel, and core, that is CPI excluding food and fuel. There has been broad-based easing in core inflation, which is indicative of successful disinflation through monetary policy actions. The near-term outlook, however, is masked by risks to food inflation, which might lead to an inflation uptick in November and possibly in December.
All right, so that's more or less what has been predicted for the Indian print. Now, we're also looking at the print in the US, and that I think is something that a lot of people globally are focusing in on, because that is likely to have a bearing on the course of monetary policy and the decision by the Fed, which is also later this week. In fact, tomorrow, Pallavi. So this print is all important from that perspective.
Absolutely, Alex. So essentially, in simple words, what we're expecting from the US inflation print is that it will show signs of cooling, but it will continue to remain above the Fed's 2% target. And more importantly, the cue that's expected to come in from this print for the Fed's meet is that on expected lines, it's expected to provide the Fed enough comfort to hold rates steady. That's pretty much thought to be a given from this meet.
Absolutely. And in fact, there are still question marks about when the rate cycle will turn, with the jury out as to when the cut will happen, because if you've been paying attention and you've looked at some of the headlines on this platform as well, on this channel as well, we've told you in the past week, you saw that the jobs data was actually better than expected on Friday. And that really points to resilience in the US economy, which really has been the talk of the town all of this year, and could in fact head into next year as well. Let's talk about a few stocks that you should watch out for. And in fact, one of them has to be IREDA. It has gained about 60% or thereabouts in just the past 5 trading sessions. It is up as much as 18.5% in trade today. And that's partly because the government is considering Navratna status for the company, but also because of the tremendous potential that is visible in the lending space for renewable energy going forward. We spoke with the chairman and the managing director of the company, Pradip Kumar, and this is part of what he had to say. Listen in.
We are financing to this space, particularly agriculturists. Our yield will keep at a very minimum level, because our portion of the asset portfolio will not be that much, because we have started the retail year back. Now we'll be fully putting it a dedicated division. If required in time to come, we can have a completely different entity. Maybe it is a wholly owned subsidiary or a subsidiary, by jointly getting into this space with others also. See, our object is to make a fair amount of awareness and bring down the perception, risk perception. The perceived risk should be out. The genuine risk should be captured. That will be our approach to focus.
Let's take a break. Stay tuned. We'll be right back.
Welcome back. You're watching Markets IQ on NDTV Profit. Now, we're looking at the screen and the Nifty 50 is trading with cuts of about 30 points or thereabouts, down about 0.1%. And from the broader markets, there are a few stocks that have been buzzing. There is, of course, Dixon Technologies, which is now up only about 0.2%, but which was higher earlier. It's lost quite a bit of ground. And quite a few of the insurance companies, so the likes of GIC, which is up at this juncture, still about 4.8% off the high point of the day. And you have HDFC Life, which is also gaining about 2.5%. But another stock that we've been looking at closely is Blue Dart. It is currently up about 0.4%, and that's after the aviation arm that the company has purchased 2 aircraft from its subsidiary DHL Aviation Netherlands. We spoke with the managing director of the company, Balfour Manuel, and we asked him about the company's plan and what the company has in store with regard to the government's Gati Shakti initiative. Listen into what he had to say.
The 2 new aircrafts are more fuel efficient. These are 737s. And the intent is to go deeper into Tier 2, Tier 3 locations where smaller aircrafts serve the purpose better. And also in line with the government's policy, the Gati Shakti and all those policies that support growth in reaching express logistics and in entirety the logistics to improve in the country. I think it's just in tandem with that. That's the plan.
The marriage season has boosted consumption and edible oil volumes are growing at a robust 20%. That's according to Adani Wilmar. My colleague Sesha Sen spoke to the MD and CEO of the firm, Anghu Malik, on the sidelines of the CII FMCG Summit. Here's a slice of that conversation.
Globally, the edible oil prices have come down, and today the prices are almost at the bottom. These prices are very comfortable for the consumers to buy, and that is why you can see higher consumption story both in urban and rural. We are seeing a growth of almost 20% in edible oil consumption by volume, which is not heard of. Normally it should be 8 to 10%, but now it's more than 20%. So that means people are consuming. Prices are comfortable. Out-of-home consumption has increased because of the big marriage season and very huge consumption of edible oil in the marriages. As far as margins are concerned, you see our margins are not basis price. We go on per ton basis or per kilo basis. Our margins are basis that. So even if the prices goes up or comes down, we generally keep it within the limits of our bottom line and top line, balancing it with the overall objective of meeting our bottom line targets. But we are very conscious about the market share. So we do pay more attention towards market share.
So what is the bottom line target?
I can't tell you about a target because it's all product-wise, it is region-wise target. But by and large, the present situation gives us a lot of comfort in terms of hedging at the right price, getting the hedge correct. Overall buoyancy in the market, consumption with higher volume, lower cost of operation, lower per head cost of whether it is manpower or fixed cost or anything. So overall, the cost is lower.
Right. So we have always seen the volume growth, is good for Adani Wilmar. However, if you look at the distributors, there is a growing concern that they are kind of piling up on excess stocks. It is not selling. What is it that is slowing the general trade? Is it the shift towards the e-commerce a major factor that is playing out, or is it something else? How do you see this?
See, this one has to see which product you are talking. During Diwali, what happens, there is a lot of schemes for the retailers, and in our business, we call it dumping of stocks. Now, dumping of stock is common during festivals because you ensure your retailers are packed with your stocks. This is good for other FMCG product, not good for food, because our food product needs shelf life are small, so they need to be faster turnaround. So in atta, we want 7 to 10 days. In sugar, we give 7 to 10 days. Oil, we give 7. And every week we go and cover. We also don't want them to take more stock because the price volatility is there. So we don't want them to be caught in any wrong thing. So we always give lower stocks and we keep them faster movement of stocks.
Got it. I would also like to know from you in terms of the institutional demand, how is it looking like?
I think this year is fantastic, Shesha. The
On the growth,
number of marriages you see, and you see how Indian big fat wedding is happening. And now, what is it that is consumed? Basmati rice, edible oil, maida, sugar, and we are there in all the products. So, Indian weddings are a big consumer of essential commodities like this. Hotels are running full, and you see the reservations are not available. Banquets are full. Any marriage gardens are full. So all this put together gives a lot of buoyancy on the consumption of essential. This will continue till April 15th. So we have a very big marriage season this year.
Any growth projections that you keep for the institutional demand?
See, normally overall the company is growing at around 20% on edible oils and 30% on food. All including the out-of-home consumption. Although I think we should continue with it and do equally well.
All right, now at the same FMCG summit, our colleague Mahima spoke to Reliance Retail's Damodar Mal, and she asked him about the trends that he witnessed during the festive season, and this is what he had to say.
So, what according to you are the modern trade trends as of now?
We are seeing in our world that I call Supermarket India, which is digital modern retail and physical modern retail. We are seeing bullish trends, both in terms of increasing consumption as well as premiumization in all categories.
So, if you see, the Indian customer base is slightly price sensitive and they always look for discounts. What do you think is the discount game? And do you think that discount is the key growth driver?
As I said, modern retail lives on the fact that we premiumize all categories. We are the place where people with their higher incomes, they express their higher incomes through small joys of life. Deals and discounts is a nice background to provide when people are up trading. So it's best when we'll sell Dove to a shopper of Lux or Hammam, but we wrap the Dove in a value deal of the day, saying if you buy two, then I'll make it interesting for you. So deal is a way of getting attention of the customer on digital or a physical modern retail platform. It's a good thing because it helps the customer's guard go down and they express themselves better through what they purchase.
Also, sir, we've just seen that the festive season has just ended. What are your observations? What are the festive trends that you have observed?
In the supermarket business that we run at Reliance Retail, the entire festive season has been very positive, both in the core categories like dry fruits and everyday staples, as well as aspirational categories for gifting and premium gifting, as well as branded sweets, etc. We've seen very bullish trends.
Thank you so much, sir. Thank you so much. And with that, it's time for yet another break. We promise to keep it short. Stay tuned. Thank you for watching. We're back. Spandana Sphurti has released its Vision 2028 document. Their assets under management are expected to rise from 9,800 crore rupees to 28,000 crore rupees by FY28. The management of the company spoke to us about their growth. Listen in.
Suffice to add, I think, we've been doing reasonably well. So, we are already midway through, and almost about 80-90% of the parameters that we had laid down for ourselves, we are almost there. We are in the green as far as that part is concerned. So the vision articulated in that document, I think we'll be able to achieve the targets by end of FY25, which is still 6 quarters or slightly less away. Right. We thought this was the time for us to now come, because people, the stakeholders used to ask, what next? We also, time flew, we didn't realize that, we are already midway through. So we started work on the FY28, which is the Vision 28 document or the Vision 28 plan that you're talking about. So broadly speaking, we are going to grow our microfinance business, number one.
Okay.
Number two, we've already diversified into 2 new businesses. One is the loan against property, and the second one is our nano enterprise loans. Both of these have nothing to do with microfinance. They are a separate line of business with a separate set of people. The reason why we thought it is important that we get into these 2 business lines is, one, it lends some balance because loan against property comes with a secured tag. That's number one. Number two, we feel that there's a genuine opportunity which exists in the market, which is the missing middle, because these numbers are too low. Our average ticket size in a loan against property is about 5 lakhs. This is too low for a bank. So where do these customers go? Likewise, the nano enterprise loans. Where will the customers who need only a 1 lakh rupees or 120,000 rupees, where will they go? Okay. So with this in the background, we thought that, we will kind of, expand in these, in this business line. Okay. Microfinance obviously remains the core, which is the bread and butter. Okay. I heard you when you said that it is a pretty aggressive number, but standalone, it looks to be a big number. Okay. But when you look at the CAGR, we are talking of about 20% year on year. Okay. The industry is slated to grow roughly at that number. So I think we will be in line with the industry. All right. I have been, Pragati, saying in various forums that microfinance is a risk management business. It is not an asset management business. So if you manage the risks well, this is a good business to be in. It will continue to deliver profitability for the enterprise in a sustainable way. Okay. And that's what we are progressing on.
All right, and that brings us to the end of this particular edition of Markets IQ. It's been a pleasure bringing it to you. Do stay tuned. In just the next few minutes, you'll find a conversation on the Mutual Fund Show with Kotak Mahindra AMC's Nilesh Shah. This is NDTV Profit.